Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. So the bears in full control after a bearish reaction to the FOMC. We started really strong for the bulls this morning, and that was due in part to oil with a very significant bounce as well. Oil gave us a daily inside bar, so I'm going to be watching that tomorrow. Again, I fully believe that an S&P 500 bounce will be marked by an oversold bounce on oil, and I do believe that that will just give us a lower high on SPY. At this point on the weekly time frame, any bounce, we're looking for a lower high because the last level was 280. So we did break key support on SPY. That's very notable. The scenario that we played out for if I think that the market's going to roll over, how it's going to happen with holding the February dump lows, setting a lower high, and then rolling over and breaking both levels, that has now played out. So that doesn't mean now we're going to be bearish, right? We know we've been bearish for a while at this point. We are in a bear market as far as I'm concerned. Lower highs and lower lows, as long as we're in a downtrend on the weekly, the bear market's going to remain. So that's not going to change anytime soon. But I also want to highlight that the fact that this support level broke the low of the February dump of 249.66, that doesn't mean now we're going to dump. You know, we've been dumping to this level at this point. The daily RSI is oversold. And this is where, you know, people who aren't as familiar with technical analysis get lost a little bit, where they say, well, I thought that was a key support. If we just broke that level, why are we not looking for a lot of downside? And the answer is, well, we just saw a bunch of downside to break that support. The bears are extended to the downside. RSI is just getting oversold on the daily. And while we can absolutely see lower RSI, we did drop down to about 20 daily RSI back in the October dump. So while we can still see further downside, again, just want to clarify that we're still taking this a day at a time, and we know the trend is favoring the bears, but there will be bounces on the way down as well. So we're watching for trend changes on the hourly to indicate daily bounces. We have a new clear daily resistance of 259.40, and if we start tomorrow and break 249.35 to find the next support level, we really need to zoom out a good bit. The next support level I'm looking at is going to be down at 243.63 for SPY on the weekly time frame. The weekly RSI is not too far off from oversold as well. If SPY sees continuation into the mid 240s, that weekly RSI will be getting oversold. So bottom line is bears are in full control. You're going to be hearing the talking heads talking about recession and weakness. You're going to see it on the news more. There's going to be more fear-stoking headlines. And people that generally are not interested in the market are going to start being interested when their longer-term portfolios start showing this weakness. IWM daily RSI is 25. In free fall here, we already broke supports long ago on IWM. And to find the next support level, we have to zoom out big time. Doing so on my other monitor right now. And we got IWM, the next support level, 134.12. And that level actually broke today. 132.40 is the next major level. And there's a lack of support under 132.40. So bulls really want to hold that level. QQQ daily chart started with a nice solid bounce, gave it all back with lower lows. And QQQ has now broken the low of November. But we have not broken the February lows. We have a lot of space to go still. 153.28 is still holding, and if that breaks, we got 149.29. So a couple key supports still holding on the tech sector overall. That's a little bit of hope for the S&P 500 bulls. XLF continues this nosedive. Daily time frame oversold on the RSI hitting 25. Daily lower highs every single day, 6 days in a row. Lower lows down to 23.42, and the weekly time frame again hitting levels that we have not seen in quite some time. And zooming out to find the next support level on XLF, 23.79 broke. So we're looking down at 22.97 as the next clear level. And last, we got VIX. VIX didn't get a whole lot of follow through, and a lot of people might be scratching their heads as to why that did not happen. And one thing to point out on VIX is that it's surprise that gets these big reactions. February dump came out of nowhere. Huge bull move on VIX. Shorts covering had a lot to do with that. October dump came out of nowhere. Huge move and short covering. This move, we saw it coming to a certain degree. We never had recovery enough from the previous dump. So it's almost like this secondary dump the last 3 weeks is an extension of the October dump. So that's why we're not seeing significant follow through. We haven't even broken the highs of October because, in my opinion, the market was able to anticipate this weakness, whereas the original dump in October came out of nowhere. And again, looking at SPY on October, we came from all-time highs, instantly had a huge dump in 2 weeks. That's much more surprising than this most recent leg down. So as far as VIX goes, resistance 2664 and then 2786. And as far as support goes, higher low established on the daily, 2034 was our level, and it looks like the bulls bounced off 2250 to try and form a higher low off of that support. So bottom line is bears are in control. We are in a bear market with a weekly downtrend. Monthly supports are breaking. We're now shifting the monthly time frame. The last two bear markets that we've seen in the 2000 tech bubble, as well as the 2008 crash, those lasted a year and a half and 2 years apiece. So we're now on month number 3 and entering month number 4 of this current pullback. So just be aware that if we are truly entering a bearish market and a downturn in the economy and all this, that this is just, the first couple innings, and it could play out for another year plus. So just be aware of that, and we will be watching for the weekly trend change to be the first indication of the potential shift in momentum. I appreciate you watching. We'll continue checking in on, as always. Keep that eye on oil, and have a good night.